Unless it's fraud, by the legal definition of fraud or material misrepresentation is the word that we use in the industry. I don't care if you got $1 deductibles and it's gold plated and you got $500,000 limits, it doesn't matter. You never know when you're going to get that call, 5 minutes before you leave from an agent who really needs you to step up and go to bat for them. To me, the golden rule is to treat others the way that they want to be treated. If you're making a 5% profit, you're in good shape. And the question is asked, well, if you have all driverless vehicles, what do we need insurance for? Oh, this is going to be an hour.
Yep.
I'm going to be searching everywhere.
Welcome to the Key Casas podcast. When you hear the word insurance, what comes to mind? Well, today we're joined by our special guest, Joshua Handloff, and we're going to uncover the insurance underwriting industry where decisions are made quietly but can have a massive impact on people's lives. So Josh, thank you so much for joining me today.
Thank you for having me.
Before we get into the heavy stuff, I want to start with something light. So if someone was meeting you for the first time today, how would you introduce yourself?
I'm Joshua Handloff. I'm an insurance underwriter. And then people will ask me, what is an insurance underwriter? People normally aren't super familiar with underwriting, but basically the underwriting process is you're trying to make sure that the information that you're receiving on an application for insurance is accurate, that we're getting the proper rate for the risk, and that we don't have any exposures that we can't see on paper. So it's just basically making sure that everything is accurate and up to date, and that we are properly evaluating the exposure that the policy presents.
Basically, risk analysis is what you're basically doing at the end of the day.
What I'm doing
is trying to mitigate risk. How long have you been in the insurance industry combined with your education?
So I've been in the insurance industry for almost 20 years now. Prior to that, I was also working in the auto industry, in auto repossessions, collections. Altogether in the automobile insurance industry, I've probably been working over 25 years, but just in insurance, about 20.
Wow, the repossessions, that could be a whole other episode.
Yeah.
That in itself.
It's a much more exciting industry.
We'll have to come back to that on another episode. So now I want to ask you specifically, what insurance do you specialize in?
Sure. So a lot of underwriters work multiple lines. I work only a personal automobile insurance. So just regular Joe Schmo who drives his Honda Civic. Those are the policies that I'm generally looking at. So I'm writing the insurance that I use.
But then if you weren't doing insurance underwriting, what would you be doing?
Oh, that's a great question. I mean, I've been in insurance for such a long time that it's part of me now. This job that I have now is the first job that I had out of college. And I had another opportunity with the Board of Equalization here in Sacramento for a business analyst position. And so I was considering that. And I had I had a family at the time. I mean, I still do, but I mean, they're all out of the house now. But I think that I could have gone with that position. It was at least 25% travel, so I didn't want to leave my family that much. If you're talking about what I would love to do for a living, no matter what, I'd love to be a general manager for a professional football team. I mean, I've really soaked in all the Madden franchise time. And, right now, even I play video games that are just basically contracts, trades, and drafting. You don't even play the game anymore. So I have a deep love for football, and that's definitely something that I would have liked to do.
We'll never know. Maybe you hit the jackpot and maybe you will own the football team. So anything is possible.
Anything. So
getting into more of the automobile industry, getting back to that, a lot of people probably don't know the actual difference from the insurance agent and the underwriter. Can you kind of explain the difference from what an insurance agent does and what an underwriter does?
Sure. So an agent is basically the sales arm of the company. So there are multiple different kinds of agents. Some agents only write for one insurance company, and they're called captive agents. And then other agents, independent agents, can write for a variety of different carriers. So it's their job to meet with a customer. You walk into their office or you call them on the phone and they ask you a bunch of questions. They put that information on an application and then they send that application to us. We take a look at that application and it's our job to make sure if what the what the applicant is saying if they've included all of the information on the application. So there are situations where there are children that are of driving age in the household, and if they don't have their license, an insured may just say, oh, there are no other people in my household. And what they mean is people who can actually drive vehicles. So it's our job to try to make sure that we're including all of those people who could potentially be drivers, because that's an exposure for us. Once we get that in, we do the investigation. We let the agent know either we'll accept the policy, we'll issue the policy, and most policies just go straight through. Like, we don't even have to look at it. But there are some policies that kick out for specific reasons, and it's our job to take a look at those special cases and make a judgment about what price we're going to charge for that, and if we can even write that insurance.
When you say exposure, I don't think people really understand what that means. So you mentioned someone being in the household that's potentially a driver, and that exposure could be a risk. So is that something that gets factored into the insurance policy?
It does. When I say exposure, it's just something that could happen in a risk analysis situation. This is the risk analysis thinking is, we have factors out there that we can't see, that you can't predict. You can't predict the drunk driver who's going to hit you and run, right? Like, that's not something that you can predict. But if you know that there are risk factors within a household, exposures within a household, it's your job as the underwriter to address all of those. So like the example I gave, the person comes in, they don't exclude their son or daughter. When the son or daughter gets their license, they're driving one of the policy vehicles. And as I'm sure you can figure out, the rate for a young driver is vastly higher than those for someone like you or me who have got a couple of decades of license experience under them. So that becomes a very large risk for us, because now there's some disparity between the premium that we're getting and the risk that we're taking. And so again, it's our job as underwriters to bring those two things as close together as possible. We'll never get totally perfect, because there's obviously a limit to the amount of information that we need, the amount of information that we can ask for legally, and the amount of information that we even want about the insured. We don't want to know everything about you. We just want to know about the exposures so that we can properly assess the risk, charge you the right price. And if the policy is not appropriate for you, to get you into a policy that is. So I can give you an example of that. So the classic example for what an underwriter does is, you get an application that comes in. It has one driver, unemployed, let's say middle-aged man, and he's got 4 trucks on the policy. Some of those trucks have, financing on them. And you're thinking to yourself, what is a guy living alone that has 4 trucks, some of them with loans? How is this all working? This doesn't make sense. So, you go to publicly available information sources. You try to look up and see if this person has some kind of contractor's license, let's say, just due to the factors of the risk. You pull it up. You can see that he does have a contractor's license. You can see that he does have a workers' comp policy, and you can quickly start putting together that this guy is using his vehicles for the business. Now, the guy might say something like, the insured might say something like, well, I just want to get a better rate, right? And I understand that. Of course, we all want to pay less for insurance. Nobody says I want to pay more. But when it comes down to a loss, if the insured's employee gets involved in a loss and they call us and they say, hey, we've got a claim that we need you to pay out. My employee is injured. The car's messed up. I've hit somebody else. I have liability for them. Then it quickly spirals out of control, because now you're using that vehicle commercially, and you have an exclusion in a personal policy that says you can't use any vehicles commercially. So we're going to come back to them and we're going to say, we're sorry, but you have no coverage for this loss. So by taking the shortcut and paying a little bit less premium, the insured has kind of cut themselves off at the knees, because they don't even have the proper coverage to pay out if something bad does happen. And again, that's what we as underwriters try to prevent.
Well, I guess it's in the best interest of the customer as well, because that situation could become a huge loss. It's better to pay a little bit more, have the peace of mind, than be stuck paying thousands of dollars getting sued, going to court, or who knows what's going to happen, because now you technically are not getting beat out, got a liability claim. It's just, who knows what's going to happen after that. But along the lines of cars, what about ATVs, motorcycles? Now there's like electric scooters and e-bikes. Are those covered as part of the car insurance policies? Those need to get factored in?
Yeah. So basically, the way that we draw the line on that is, does the vehicle have a street legal registration? Can you drive it legally on the street with registration? So if you can do that, that's a motorcycle, that's a car, that's a van, that's a motorhome. So all of those things would qualify for a personal auto policy. Something like an e-scooter, something like an ATV, these are vehicles that are used on the sidewalk or off-road. These are toys, essentially. And those will generally be covered under your homeowner's policy. You have special boat insurance, but you can also insure boats elsewhere. So when you're talking about a personal auto policy, where we draw the line is it registered and street legal in California?
Wow, there's a lot that seems to go into this specific field, especially when you're having to do open source intelligence, which is basically searching the web, finding social media contacts, looking up their email, their phone number, whatever, to find out what business they have, if anything at all. Before you got into underwriting and you knew how all of this works, how did you make the decision to get into this specific field versus something else?
When I graduated in 2006, the job market wasn't great. So I was looking, and I would have taken pretty much anything. I did not get into this thinking that I would be in insurance for this long, that I would make a career out of this. It's fairly widespoken in the industry that like nobody really grows up wanting to be an insurance underwriter. Not that there's anything wrong with being an insurance underwriter, but we all want to be, policemen or, football stars or, like something a little bit more glamorous than this. A lot of people just end up falling into insurance and falling in love with it. I think that the thing that keeps me in the industry is the people. The insurance is good. It's fascinating, like the way that the stuff on the paper and the stuff in real life kind of come together. You look at it from both sides, but really to me, the insurance industry is so full of wonderful, fantastic people that have big hearts, and I just fell in love with it. I fell in love with the management aspect. I fell in love with helping people achieve the results that they desire. I love helping the company achieve our collective goals. It feels good when we do that. And then of course, you get a bonus, and that's not terrible either.
It sounds like then in this world, for whatever reason, that they tend to build culture instead of a typical 9-to-5 job where you kind of are a little bit more valued, it sounds like, versus feeling more like a number. Would that be an accurate assessment?
Absolutely. In this industry, it's not always easy to keep employees. And it's because the work that you do is complex. It can be difficult. It requires judgment. This is not an easy job. So our turnover is fairly high. Our training requirements are vast. Boy, it can take over 2 years to train an underwriter to be fully capable to where you can trust them to make decisions on their own without having them run things by you. The amount of skill that it takes to do the job and the amount of stress that you're under, especially, underwriting is stressful, but when you're going over to the claims side, you're having to deal with insureds and customers who you're trying to keep happy, who just suffered a loss, who just got into an accident, who rarely think that they're the ones that are at fault for that accident. And when we go through the situation that we discussed earlier about the guy with the trucks, when you have to tell them, I'm sorry, but your policy doesn't cover this and you're going to have to deal with this yourself, nobody wants to have that conversation. The insured doesn't want to. We don't want to. It's just the nature of the business. So there are a lot of difficult aspects about being in insurance, but if you can do it, it's a very rewarding field to be in. I feel appreciated. I know that my employees, my team feels appreciated. They're always doing something more to make us feel like this is a family environment. And that's relatively consistent across the industry.
Part of, I guess, going through something that's rigorous, something that's difficult but very rewarding, is you make it to that side and then be successful. So what is the education path for someone that wanted to become an insurance underwriter?
When I got into the industry, I had a business degree, and that was good enough at the time. Some positions require a 4-year degree or relevant experience, and some positions don't. But if I'm talking to someone who's about to go to college and they're like, should I just jump into the industry? Should I get educated? I would always recommend getting a 4-year degree before going into insurance, just because it prepares you for the process, the learning that it's going to take. I forgot probably 90% of the stuff that I learned in school. The thing that the piece of paper that I got showed me is I can do something for 4 years consistently. I can accomplish a goal that I set out to accomplish. And that's the kind of thing that we look for in insurance, because the process is long. It takes a while to develop your talent, to develop your skill. And we want to see people who have shown that already, that they can do that. There are a couple of programs. I mean, we're in Sacramento. Sac State has a program, a 4-year degree for, I think it's risk management. It's either insurance directly or it's risk management. I know that they have a program there, and it's a great program. I've interacted with a lot of the leadership there, a lot of the professors there, and they're phenomenal. So that's one way to get in. You can also go through a professionals organization like the Institute. So I have what's called, I am a chartered property casualty underwriter. So what this basically means is that I went to school for an additional 18 months just to study different insurance, different types of insurance, different forms, different kinds of claims processes, just everything under the umbrella of property casualty insurance. And then at the end of that, they give me this CPCU. These are incredibly valuable. People look at this as about the highest designation that one can get in the property casualty industry. And to me, the amount of opportunities that it opens up to you for you, not just because of the education, but also because, as with any other professional society, you get to get in with the people who have also passed. And like you said before, it's like you have that shared commonality with these people. So obviously there's a lot of opportunity to talk to people about positions that are available, or, to get a better idea of the employment situation in the local area, and to kind of get an inside understanding of how you can best serve yourself within that industry. It also allows you the opportunity to make great friends and people that have a lot in common with you and are seeing the same things on a daily basis. I get together with one of my friends. He works for a different insurance company in a different department, but when we get together, we start talking about insurance, and everybody else is just like waiting for us to finish talking about insurance. And so eventually we have to be like, okay, let's get back to the fantasy stuff. Like, we can stop talking about saving policies and underwriting risks. It's nice to be able to speak that language with people, as in most professions. And it definitely brings people closer together.
That's hilarious. And it sounds like it's equivalent to the bar exam, getting that CPCU. Mm-hmm. So it does sound like it's very valuable. Open up a lot of career opportunities, a lot of doors, and a lot of network connections. Preparing for the CPCU, though, is it like the bar where you're just locked in a room studying constantly to try to pass that bar exam, or what goes into it?
I wouldn't quite say it's bar level or medical board level. I would say it's just below CPA level. To me, it was the equivalent of your specialty classes in your undergrad. So your last 2 years of college. That's about where I pegged the difficulty at. You do have to study. You do have to be on top of it. You do take proctored exams, which means that you go to a room and you're sitting down, or at least that's what it was when I was doing it. Now, I've been a CPCU for almost 15 years now, so I'm sure that they have different testing mechanisms than they did when I was there. But I would would run down to the testing center, take my test, have someone looking over my shoulder, making sure I didn't have any extra materials, and then hopefully pass.
Cross your fingers. Hey, it's not this time, it'll be next time.
That's right.
So with all that education, is there anything once you got into the industry that education could not have prepared you for that you only figured out when you're on the job?
Yeah, totally. I mean, everything, you can have book knowledge and you can have a basis of understanding of what the industry looks like and what risk looks like. But it's one thing to read it out of a textbook, and it's another thing to see it on the ground. And so when you're asked to underwrite a policy, you do use some of the information that you learned. You understand the policy jacket better, you understand the exclusions better, and that allows you to better serve your clients and to better serve your company. But to me, it comes down to judgment. Are you making the right choice? And I think that's not just an insurance thing. You had mentioned the bar. An attorney has to exercise a ton of judgment. Just because you know case law, or just because you know examples of how you want to take a case, you still have to be able to be reasonable and ration out your arguments and to make it all make sense. And that's the skill that's necessary to be an underwriter, because you can get all the education you want, but if you can't properly assess a risk, or that's not something that's appealing to you, you're not going to make it in this industry.
So really it comes down to that sound judgment. You could do all the work you can, study for, take the exams, tests, but you just make bad decisions, probably not a good fit. So then when it comes to like how you actually earn money, it kind of sounds like it's going to lead to, you said bonuses earlier, but do you get paid for every policy that you write, or how does an underwriter actually make money?
Most underwriters are paid as a salaried or hourly position. We're generally employees. While we do mostly have incentive programs and bonuses, these are usually corporate wide. So it's not just the underwriting team that's getting these. We don't have, I guess you would say, like individual bonuses for certain things. It's just we have a set of metrics. If we achieve all of those metrics, we're much more likely to get a better raise. Or, if we achieve those metrics and everybody else does, then our company profits well and we get a much larger bonus. But the insurance industry, and one of the reasons that I've stayed in the insurance industry, is the stability. The job security is amazing when your product is mandated by the state of California to possess. Everybody who drives a car has to have auto insurance. So the job security is obviously fantastic. It's on par with utility workers, or probably not quite state worker, government worker, but approaching there. I usually compare us to utility workers. The amount of money that they invest in us as well in our training makes it difficult to let us go as well, because to replace me, you're going to have to train somebody for 3, 4, 5 years to make it to the position that I'm at. And that's a lot of hours, and that's a lot of benefits, and that's a lot of money. So we're always trying to save the employees that we have, prevent turnover, as opposed to bringing new people in. It can be difficult because, again, like I said, you have to find that right fit. You have to find someone with the ability to do what we do. And I've seen a lot of people go through that training program, make it the 2 years, figure out this is not what they want to do, and move on. And of course, as a company, that's obviously difficult for us because we lose that person, and we wanted that person, we picked that person. But it's also losing all of those resources that we use to make sure that that person was the best underwriter that they could possibly be.
That's tough. Yeah. If you get them in and they leave eventually, I mean, more power to them at the end of the day, but that definitely could be a challenge for sure. Well, you mentioned metrics earlier. So you were evaluating these policies that are getting kicked out, and there's like this one that's like 50-50, like it could be approved, could be denied. Like, how do you make that ethical choice?
A lot of it depends on the culture of the company that you work for. We have a basic core principle that says tie goes to the insured. If you're 50-50 on a risk, you give it to the insured. We're audited on the files that we work to make sure that we made the right decision, to make sure that we followed the proper protocol. When it comes down to judgment calls that are 50-50, they'll usually give that to us as well in the sense of, this one could have gone either way. We're not going to give them an error for this because we could have done it that way and it would have been fine too. When I look at it, when I'm down to a 50-50, it's my job to look for more. It's my job to make that a 51-49 or a 49-51 so that we can make a judgment with confidence. But when we can't do that, we just let it go and let it happen.
I like that approach. That way you're not really guessing. You're just a little bit more confident one way or the other. When you're doing this analysis, is there a risk framework that's used?
The thing that distinguishes insurance companies from each other is the way that they rate policies. And those are highly regulated. So we submit what's called a filing to the California Department of Insurance. They take a look at this filing and they either approve it or send it back to us to fix it. What we basically have to do is we have to justify to them, based on this data that we're presenting you, we feel that these factors should be rated in a certain way. In California, you have 3 primary rating factors. Those factors are driving record, annual mileage, and license experience. We all have to assign a number to those, like at what point is, how much more expensive is 9,000 annual miles than 8,000 annual miles? How much more expensive is a speeding ticket on top of just a base rate? And it's those numbers, our proprietary soup of rating factors, that are the difference between us and another insurance company. A lot of times when people are coming or advertising for insurance, what they're saying is, you can save such and such an amount of money, right? And the reason is because, they're going to rate things differently than we're going to rate things. We may see a 16-year-old driver as a huge risk, but as long as we package that risk with the parents and, the other kid that's driving and away in school, and we have the entire risk, and we have the homeowner's policy, and we have the umbrella policy, okay, now it's starting to make a little bit more sense, and we can kind of take some of the premium out of that younger driver because it's spread around the risk more. Whereas other companies will just, anytime they see a 16-year-old driver, they'll just skyrocket the rate. And even when we do it, it's high just because the risk is so high on a 16-year-old driver. It's really important to consider those differences when you're selecting insurance, because based on your particular situation, the way that they rate your policy could be dramatically different from carrier to carrier.
Yeah, I could definitely see how that could play out. When I was 16, I think I got a ticket every single year, probably till I was like 25. So it was definitely high risk.
I'm sure your parents had something to say about that, huh?
Yeah, well, eventually I just moved out and I was like, oh, you can't talk to me no more.
That's right.
On the car policy side, most people never actually meet their underwriter. They're usually working with that, as you mentioned earlier, the agent is doing the sales part of it. Mm-hmm. So do you ever have to contact the customer? Do you ever interact with them?
Occasionally one will get through the filtering, the people who are screening our phone calls for us, or there will be a special situation where an insured is like freaking out and the customer service rep or the agent can't really answer that question appropriately. So in those cases, we'll take calls from insureds, but we normally don't, because our business is with the agent. We pay our agents a commission, and what they're getting paid for is to service the account. If we had to take calls from all of our insureds about everything that they wanted to talk about their policy, we'd never get any underwriting done. We just don't have that kind of staff. Our job is to look at the policies and assess the risk, not to explain that to the insured. And while I would love to have a conversation with every insured about why we write a risk the way that we do, why their insurance is going up, we just don't have the capacity to do that. That's our agents' jobs. I think personally their jobs are much harder than ours. I only write one line. An agent can write and be responsible for many, many lines of coverage. They have to know multiple carriers and the rules for multiple carriers, the exclusions and the different policy jackets. And so I always have a lot of respect to the agents to have to accumulate and keep on top of all that information and all of the new information that comes out every day, anytime a company decides to change their procedures. And then they have to relay that in layman's terms to the insured so that they understand, insurance speak. And that's just a really, really difficult process. So anytime I'm talking to an agent and they need me to help them out, I try to bend over backwards to make sure that they get what they need because they need it.
Oh man, that's definitely a hard job, but I can see how it could be more complicated speaking all the time with a customer versus doing more of the analysis on the back end and then getting an approval. We talked about like the three main factors that go into that calculation. What is the things that people often overlook that could raise their insurance premiums that they were like, oh, I didn't know that was going to make my premium go up?
The thing that I think surprises most people is how much it matters how they use their cars and how much they use their cars. These are the pieces of information that I feel least comfortable asking about from the insureds because I feel like we're prying into their lives more than they would like. Unfortunately for us, this is information that we must have in order to properly rate a policy and to give you the best rate that we can for the policy. Often this will include asking what a person's job is, and some people are hesitant to share that. And then once we ask what their job is, we ask, well, how do you use your vehicle within that job? Do you work from home? Are you driving to different job sites? Are you just driving to one location and commuting back and forth? While this seems like information that may be excessive for some insureds for us to ask them, that's the information that we use to assess how much they're driving every year. And that's really important. The other thing that it's being used to assess is whether or not our personal auto policy is appropriate for their usage. So again, like the guy with the 4 trucks, it's not just that we know how far he's driving those trucks every day and how much annual mileage he's accumulating. It's figuring out if this is even the right policy to cover him. So I think that that's probably the thing that insureds wouldn't know affects their policy so much. There's been a huge movement in the industry, not only with telematics, the little devices that you plug into your car, but also with, odometer reporting. So a lot of insureds are seeing a trend lately where they're receiving letters and the letters are asking them to just write down the odometer of their vehicle. And then you send this letter back to the insurance company, and then we'll calculate, well, how many miles have you driven since the last time you completed one of these letters, or when you added your car and you told us what your odometer reading was. And based on that, we can calculate how many miles you are actually driving. And this helps us and helps the insureds in a couple of ways. The first one is we're making sure that we've got the right rate for the risk. So on one hand, the person who was working and was putting on a bunch of commute mileage, and let's say was putting 14,000 miles a year on their car. Let's say they retire and they don't tell us they retired. So we're still rating that vehicle as if they're using it all the time, every day. And yet they've dropped their annual mileage down to 6,000. Now the savings between 14,000 and 6,000 on a vehicle are substantial. So it's important for us to make sure that we know exactly how many miles you're driving so that we can either charge you more if you're underreporting the mileage or charge you less if you're overreporting the mileage.
For those letters though, it could be just easy for someone to just put in a random number. Is there any of those checks that can validate beyond just the letter that's being sent back in to confirm that the customer is actually honest?
I mean, there are multiple different information sources that we can use to acquire that. Most of the time, we trust our insureds. Some of the programs that are offered within the insurance industry automatically pull that information. from other sources that report to a central database so that you don't even have to send us the letter anymore. Like we can just pull it automatically and adjust at renewal. But most of the time we're asking people to confirm. And if we're seeing something like we've got a real estate agent that has 20 different listings and he's saying, I got 3,000 miles because every time they send me a thing, I just add 3,000 miles and da-da-da-da-da. So we can at that point ask for them, can we get a photo of your odometer reading?
Nice.
So that we can see, the
Right.
reading itself. Because if we think that someone is being deceptive, it's our job as underwriters to make sure that we clear all that up, that we get the accurate policy picture. That's the most important thing for us to do. And if we have to ask for additional proof in order to justify the rate that an insured is receiving, then that's what we have to do.
Once someone gets caught like doing that, being deceptive, like does that are like the insurance companies connected? Can I just switch carriers and go to the next car insurance company and be like, well, they won't know? Or once it's kind of like in the system, is there like a sharing of that data? So like the next insurance company is going to probably know regardless because of such a big discrepancy there in the mileage.
Well, there's no real like central warehouse that stores all insurance information. We take information from multiple different sources. So for instance, there are central clearing houses for accidents and accident chargeability and how much they paid out that most insurance companies subscribe to. In the situation that you're talking about with the annual mileage, and even drilling down a little bit more on what it is that we can do when we have an insured who's reporting erroneous information, we have ways in which we can cancel the policy if they don't comply with what we're asking for. There are certain pieces of information, of course, all regulated by the state, that we're allowed to ask for. And if we don't get it, we can cancel the policy. On the other hand, what you're talking about when you're intentionally misreporting, unless it's fraud by the legal definition of fraud or material misrepresentation is the word that we use in the industry, you're clearly saying something incorrect in order to get a benefit from your insurance product or a lesser rate or a more inclusive policy. These are things that are difficult to prove, but we do that by employing what's called a special investigations unit or an SIU. And so every insurance company is obligated by the state to either have a department or to contribute to a department like this. And their job is to do the deep dive. Their job is to go and actually interview the insured about what it was that they said and what it was that they did. And it's usually in the case of claims that happen, when you're talking about fraudulent claims, you can pull up someone's accident record and you can see that this person has 14 claims in the last 5 years, and they're all bodily injury claims.
Oh, geez.
They all got rear-ended, and there's always somebody in their family in the car that also got injured. And so you can see that this is like a pattern of behavior, that this person could possibly be someone who commits insurance fraud. And it's their job to go ahead and investigate those instances and to report to the authorities when they feel like we have legal fraud that we can prosecute.
Dang, that's crazy. I'm sure there's that sounds like a cool job too. I mean, and also a difficult job. The investigations, interviewing people, that could turn very confrontational, but hey, it is what it is, I guess. But that does kind of bring me to like, what is the legitimate way to then get discounts instead of doing the misrepresentation or going to the extreme case of fraud? Like, what's the legit way that people can get discounts that may not be like so common?
We'll start with the best discount. The best discount that you can usually get is going to be the good driver discount, the California good driver discount. And this allows an additional 20% discount if you haven't had more than 1 point in the last 3 years. So the best thing that you can do is to be a good driver. Don't get tickets, don't get accidents. That's going to be the number one way to do that. Insurance company make a big deal out of bundling. bundling your policies together. When you start stacking those multi-policy discounts together, that can save you a substantial amount of money. We're not just begging you to do it on the commercials because we want it. It's because it will provide you substantial savings on your policies. Other discounts, the state requires us to disclose all of our discounts to our insureds. And so we will give you documentation of all of the discounts that we have, and whether or not you qualify for those discounts is between you and your agent. So you can say, oh, I have a son and he's going to school and he's 16 and my rate just exploded because he got his license. Well, is your son a good student? Does he have a 3.0 grade point average? If he does, that entitles him to a substantial discount on a substantial increase in premium. So there are lots of discounts that are available. They're all disclosed as soon as you sign up for a policy. If you get the information after you have written the policy, you can just call your agent and say, hey, I qualify for this discount, sign me up. They'll usually ask you for some kind of proof, some kind of documentation that you qualify for that discount, but that's a really good way to get those. The other one would be a multi-car discount. So the more cars generally you write up on a policy up to a certain point. There are only so many vehicles on a policy that we want to insure. But there is a substantial difference between the premium on one car and two cars on a policy.
The one that I think that caught my attention anyways was the good student discount for someone who's 16 if they have a 3.0 GPA. Because when my son is in 9th grade, he's almost going to be 16, 10th grade. If they start messing up their GPA, I'm going to be screwed with this time to insure them. So I have to make sure that they're aware that it's not just about the good grades, but it's also hurting the family's ability to go on trips, take vacations, buy them toys, school stuff, and everything else. So now I know how to prepare to make sure I can get that discount when they are of age. So that's a good insight into the legitimate way to get those discounts.
Well said. The one discount that I will talk about is a lot of times on those automatic reporting of annual mileage, you will also receive a discount for signing up for those auto report functions. And again, that allows the rate to move based on your usage, whatever it is. And then we also give an additional discount on top of that because you're helping us keep that rate accurate.
Wow, that's good to know. Yeah. So if there's an opt-in option, that might also reduce the rate.
Mm-hmm.
Awesome. What about any government subsidies? Is there anything like that people can get either through like Department of Insurance or any one of these programs that might be out there through a different department? I don't know which one, maybe Bureau of Automotive Repair, who knows what it is. But is there anything like that people might not know about that they may be able to look into and qualify to get a discount on their insurance?
I learned about this a long time ago, so excuse me if I'm a little fuzzy on the details, but there is a program in California that's legally mandated called assigned risk. And so this is for people who normally cannot obtain insurance because, let's say, their driving record is too bad or they can't afford it. So they can go into this assigned risk program. They can apply for it. Not too many people qualify for the assigned risk program, but it is something that's out there. The main way that government subsidizes insurance, however, is by being the insurer of last resort. So if you're in, let's say, Placerville, you're going to have a real hard time getting homeowners insurance. And the reason is not necessarily because, Placerville homes are more expensive or anything like that. It's that the fire risk in the foothills of California is legendarily high, much like the hurricane risk in Florida or the flood risk in Louisiana. These are things that are recurring catastrophic events that happen and that we can predict to a certain degree. So any for-profit insurance company is going to look at a risk like a house in Placerville and be like, I don't know about all this, I can't make money on this risk because, it's fine this year and it might be fine next year and we could be making a profit. But in year 3, if we have that catastrophic Palisades fire or Paradise fire, we're losing our shirt on this kind of stuff. And so what the government does is they step in and they say, well, if nobody's willing to insure this, we will insure it. And what they do is they collect premiums directly from the insured. And if a catastrophic loss goes down, then that's not just all paid for by the taxpayers. It's also assigned to us as insurance companies based on our market share. So, for instance, with the Palisades fire, it wiped out a ton of houses, total losses on very expensive homes in Los Angeles. A lot of those homes were insured under this California FAIR plan, and that's the insurer of last resort. And so what happened was the FAIR plan didn't have nearly enough money to pay for all of these losses. So what it's going to do is it's going to come to us as insurance companies and it's going to say, hey, look, we can't pay for this, so we need you to pay. And what we're going to do is we're going to make you retain some of that risk because you wouldn't insure any of these houses. So we're going to make you pay for some of this stuff. And then we're going to allow you to pass a percentage of that overage on to your insureds. So the insurance companies don't have to take all of the brunt. The people of California don't have to take all of the brunt. We share it as a system, which is a very insurance-y thing to do.
Share the risk. Why not?
Exactly. You got it. So that's the way that government supports and subsidizes us. The other way is through enforcement of the law. You know, if people are out there and they know that they can commit insurance fraud and nothing will happen, there will be a lot more insurance fraud. So knowing that there's someone there that the people of California, all of the taxpayers pay for, that's enforcing the laws that are on the books that are voted by us and our legislators. That's another way that it subsidizes us, because if we don't have that protection against fraud, we have to be way more exacting in our underwriting, and we have to charge insureds exorbitantly more to cover that. I mean, fraud just in California is a multi-billion-dollar a year industry by itself. And so, you know, we all have a vested interest in making sure that this type of stuff doesn't occur, and that subsidizes, it keeps the rates down.
Dang, it being $1 billion industry, the car insurance fraud, in addition to, we originally had the Paradise fire, which was probably equivalent to the Palisades fire. How are car insurance companies surviving through all this?
At the end of the day, any cost that we incur, the insured incurs. We have to, again, file with the Department of Insurance, which means we have to justify our costs. So you can say something like, oh, you know, my car insurance is so much more expensive this renewal than it was last renewal. And a lot of people will say, oh, you know, these guys are just trying to make their margins. You know, these guys are just trying to get one over on us and make money hand over fist. And that's not the case. You know, we have a lot of, like you said, we have a lot of exposure. We have a lot of things that can go wrong. If something catastrophic does happen like that, like the Palisades fire, insurance companies rely on what's called reinsurance. So it's insurance for insurance companies.
Oh, wow.
Yeah. So the reinsurer says, okay, you retain the risk on a catastrophic loss for your first $5 million. You pay the $5 million that you were going to pay anyway. But once it gets to $5 million, we will cover it from there up, or we will cover from 5 million to 100 million. And then you cover anything that's above the 100 million. So that's a way that we kind of mitigate our risk here, because if an insurance company goes through the Palisades fire and they have no cover, it's like you being in the Palisades fire with no insurance. We're going to lose our shirt. Everybody in the company is going to get fired, and you're going to have one less insurer, which means the rates are probably going to go up for those other insurance companies. So that's the way that we primarily mitigate those risks.
I never hear about these other programs that are there, and that it's not really the car insurance company that is not insuring those areas. There's just risk. What are the misconceptions about the car insurance industry and underwriters that people believe that are true that are not true?
Yeah, a lot of people think that we're just out to get them, that we're providing a useless product. And for someone that pays premiums and never incurs a loss, I can understand why they would think that. You never value your insurance policy until you're actually using it, until your house is on fire, until you get into an accident. That's when you see the value of the insurance, because instead of paying for your $27,000 total loss vehicle, you just pay your $500 deductible and we take care of it. And so one of the big misconceptions is that, we're just raking it in and making money hand over fist. In the insurance industry, insurance companies in general, especially property casualty companies, if you're making a 5% profit on the risks that you're writing, the amount that you take in premiums versus the amount that you pay out in claims and the expenses to adjust those claims, they got to pay my salary, not just the claim that happens. If you're making a 5% profit, you're in good shape. So people are thinking that we're making a lot of money here, that we're just swimming in it, and that is not the case. The competition for auto insurance products in the state of California is fierce, and you have to differentiate yourself in a multitude of different ways in order to capture that market share. And you can't do it by overcharging people, because the number one thing that insurance customers are focused on is price. And if you're not delivering on your price, you're not going to get any policies and you're not going to generate any profits. I don't care how nice your insurance policy is. I don't care if you got $1 deductibles and it's gold plated and you got $500,000 limits. It doesn't matter. If you're charging twice as much as the next guy, nobody's going to buy that policy.
Yeah, that's definitely true. It's one of the things that I look at the most as well, is like, can I get a break here? Can I reduce my costs? How do I save more money? Because money saved is money made. But I would have never guessed that the margins are that thin. You're talking about 5%. That's not really ideal, I guess, especially in California and all the things that you guys have to juggle. Because if one thing goes wrong, there goes that 5%. Like Palisades fire, again, bringing that full circle, it could be a huge loss to the company. So I guess it's a little eye opening, to say the least. Going back to underwriting specifically, have you ever been in a situation where the data said, I should write this policy based on the data, but your gut was telling you, don't do it. There's something wrong here. Do you have an example or a situation, or does that happen ever, where you're like, something just doesn't seem right?
That's basically how we operate, because like you said, on paper versus what we actually think. So you can submit an application to us with all of the things that we want to see. But as soon as we start digging into that risk, we're going to find a lot of the things that are being hidden on that paper. Our job as underwriters is to put ourselves in the shoes of our customers and to basically paint a picture of the life that they're living, so that we can properly understand how to assess their risk, how to assess their exposures. That's the primary way in which we do that, by just painting the picture so that it makes sense. And if it doesn't make sense, to keep digging and keep digging and keep digging until you figure it out. Some policies are really easy to figure that out. The person who submits a policy with 3 Euro vans, like Mercedes Sprinter vans on it, and she's a nurse. Okay, like, I get it. If you have one van and you maybe convert it into an RV, you got a bunch of kids, or you're towing surfboards or something like that, okay, I can make the case for that. But three vans, now I'm going to start, searching the internet to see if I can find what you're doing with these vans. And in several cases, I've run across that people are using these vans for like those paratransit vans. And so, again, as an underwriter, there are people in those vans who are not going to have proper coverage if this policy gets written. There are people in those vans who are going to suffer if they don't have the proper bodily injury liability protection, because I can guarantee you that the person driving around those vans is not going to have the $500,000 that it's going to cost to fix whatever broke when you got into an accident with disabled people in your van. Like, so it's these are the minefields that we get paid to go through and make sure that we're avoiding as many as possible. And some of those risks still make it through. And we see those and we make adjustments as necessary in our procedures and our policies to either tighten up underwriting standards because we're seeing a lot of this particular thing, or to loosen things up because we're asking too many questions. It doesn't, the amount of work that we're putting into this, the amount of stuff that we're asking our insureds for is not equal to the amount of money that we'd be saving uncovering these exposures.
So it sounds like it's just part of the job. That's what you naturally do. It's not like an edge case where it looks good on paper, but your gut's telling you something different. That's like the standard. That's like every case is that.
Every single file we look at. Yeah.
It's basically that.
I mean, we want it to all be good. It makes it easier for me if I can look at a file and I do some preliminary, digging and everything looks good.
Yeah.
Everything makes sense. I move on with my day and I'm a happy guy. But then there are those files that you come across and immediately when you see them, you're like, oh, this is going to be an hour.
Yep.
I'm going to be searching everywhere to possibly find information because we don't want this risk. It is not appropriate for either the rate that we're charging or to our company as a whole.
What about like all these AI tools now that there's ChatGPT, Claude, and all that sort of stuff? Is that helping your industry at all? Does that help with any of the research? Or do you see, how is that impacting your industry at all?
Yes, it does impact our industry heavily. A lot of the processes that insurance companies go through are automated, and some of them have been fully automated since prior to the popularization of artificial intelligence. Sometimes it helps me as an underwriter. I have a million different procedures. I have a ton of different policies. I have 1,000 emails from my boss telling me there are these special situations. Here's a defect in our system. Here's the workaround. And so what I use AI for is to help me find that information, because if I'm looking for a specific case that I've relied on before and that I know this answer, I know we've been through this situation before, and I don't know where it is. So I can ask the AI, hey, in this situation, what have I done before? And the AI will go through my email, it'll go through my chat logs, it'll go through the procedures, it'll go through all the defects and all of the drill down procedures. And it'll come back with, oh, this is what you did the last time based on this email. I click on the email, I verify it knows what it's talking about. And then we can make a decision based on that. So that to me is a massive savings of time, because I've just went from a 20-minute search of maybe finding the information that I need to a 2-minute search that almost always figures it out, that almost always comes up with the information that I'm looking for. We don't use AI to pull information from external sources in our underwriting department. We do that all manually because there's certain things that AI can do, and there are certain things that AI can't do. And fortunately for us in underwriting, AI can't do this yet. And so it takes an underwriter to properly investigate a file to make it make sense, because the machine is just not good at that. It's good to help us. It's good to support us, but it doesn't do our job for us.
Yeah, I typically find it more of an assistant, to your point. Summarize stuff, find references, find articles. But when it comes to actually getting specifics, doing analytics, like I need this exact number and I need to have some intuition, and that calculation, completely wrong, provides the wrong references, wrong data. It'll just fabricate information. It's like, oh yeah, you should underwrite this person. And in actuality, it should have been denied. Autonomous vehicles. Mm-hmm. So you have the full self-driving, and the Teslas have it. I think I forgot the other names. There's a few different carriers that now do like, the Waymos. They have the full self-driving. And eventually, we're probably going to go to a place where there is no one behind the wheel. It's just the autonomous vehicle. So how is that going to impact underwriting when, even if this is a 16-year-old, they're not behind the wheel?
The way that it's usually done now is that the driver of the vehicle is the driver of the vehicle. They are responsible for the operation of the vehicle to make sure that the machine is following the rules of the road, even if it's the machine that's driving. Anytime that you operate one of these autonomous vehicles and you click it into that mode, or even you start up the vehicle, I know I have it in mine, and it only has like automatic braking and like lane correction. It tells you, hey, you're responsible for the operation of this vehicle regardless of whether the machine is driving or whether you are driving. You take that responsibility onto yourself. In the future, maybe these things change, but as of now, in my experience, it's always on the driver of the vehicle.
Yeah, that's a good point. Even if there is full self-driving, they can always turn it off. So there's always that extra risk there.
Yeah,
So
and the question is asked, well, if you have all driverless vehicles, what do we need insurance for? And to that, I respond, well, you're right, because machines never make mistakes. So
sure, a little,
yeah, I think that auto insurance is going to be around for a long time.
One bug and every car is hitting the guardrails.
Exactly.
It's going to be crazy.
Or something gets hacked, our network gets hacked, and we're all running into each other. Yeah, good stuff.
Oh man, the world of cybersecurity is just going to get more and more crazy with all that hacking that's going to be going on.
Absolutely.
When you're looking at all these extra underwriting edge cases, do you ever get decision fatigue? Do they all start blending together and looking all the same?
Mm-hmm.
And how do you mitigate for that?
Taking breaks. The more that the machine can do, the more that the AI can do, the less easy work we have as underwriters. Our work is more exciting because we're dealing with special risks every time, and we're dealing with investigations every time. And that's the most interesting part of the job. But like you said, after a while of sitting and looking at hard files for 7 hours out of the day, on hour 8, you're right, I'm like losing it. My coffee has long since left me. Every 2 hours, I'm out by the river. I go and I take a walk. I work out in the morning. I work out after work is over. It's my responsibility as a professional to make sure that I put myself in a position to be able to make those judgment calls all day, because you never know when you're going to get that call, 5 minutes before you leave from an agent who really needs you to step up and go to bat for them. It's Friday afternoon. My insured just told me that they bought a motor home. They're going to be taking this motor home out on a 3-week road trip tomorrow. I need this on the policy because otherwise the insured's not going to feel safe driving this $250,000 motorhome that they just bought. In those cases, you want to make sure that you're serving your client properly, and you take the file and you stay late and you do what you got to do. And it's up to you to put yourself in the I can help category and not in the it's 5 minutes until I get off and sorry, you can just deal with this, or they can postpone the trip. It's not my problem. That's what makes me a professional, because anybody can say, I'll do it tomorrow, but a professional is the one that says, we're going to do this because this needs to get done.
Yeah, especially if they're going to take a trip, that's for sure. But on that thought process of taking a trip, I know when I go to different states, sometimes my insurance policy will cover the rental vehicle, but sometimes they force feed the insurance and they will not give me a car unless I buy insurance through them. I'm like, what's going on with that? I thought my policy covers it everywhere. So is there different nuances of travel and coverage?
Well, I can't speak for the auto rental agencies that mandate that you buy insurance coverage. I've never experienced that before. I've heard of those experiences before, so I'm not invalidating your experience, but I just haven't dealt with that personally. When I go and rent a car, I know my policy jacket and I know what's covered and I know what's not covered. So if someone tries to come up to me and say, hey, you don't have that coverage, we need you we're mandating you to buy coverage, I tell them no. Here's my policy, here's my declarations page. I have non-owned coverage. If you're not going to rent me a car without paying some exorbitant sum for supplemental insurance, I'm going to go down the way and rent from that guy because I don't have to do that. Knowing your insurance policy is incredibly important to determining the coverages that you'll have on that rental car. So for instance, if you're running minimum limits and you have no comp and collision on your vehicle, on your personal auto policy, you can't go to the rental agency and say, hey, like I'm covered if anything should happen to your car. That's not true. You don't have that coverage. So that's when they can say, yeah, you need to buy this particular coverage because we're not going to let this car off this lot without full coverage. If you make a mistake, we don't want to be out $30,000. That's how that works as far as rental goes. But for the most part, as long as you got full coverage on your vehicle at home, you're most likely going to be able to transfer that coverage via a non-owned policy contract mechanism to the rental car that you have.
Yeah, that's good to know. It's good to know that, one, I can either just call the rental car company and verify before I buy through them, and also check my policy and make sure that my full coverage has that option. So I'm not double paying for insurance that I don't need if it is actually covered. Is there any parts of underwriting that we didn't cover that you would like to get into?
I don't think so. I think you asked a lot of really good questions. I would encourage, if someone wants to know more about their insurance policy and the capability of their insurance policy, what they can and can't do, I would encourage them to talk to an agent. An agent's job is to make sure that they explain insurance in a way without all of the resorting to pulling out the policy jacket and reading the exclusion list and all that very dry, boring contract language. I would go to them first for advice on how to handle their insurance. These people have a lot of real world experience. They've dealt with a lot of customers and a lot of different situations. And so I would highly encourage people to talk to their agents.
If more people want to find out about underwriting insurance, the education, the schooling, how to get a job, is there any resources where people can start pre-training to get into that field if they're interested in it?
Yeah, I would always recommend the institutes, the people who chartered my CPCU, my professional designation. There are a lot of resources on the industry within their website. You can always go to that Sac State program. They have a lot of fantastic educational resources. And then if you just want to know more about how your insurance policy works from a government standpoint, what does government do to help protect you, to make sure that insurance runs smoothly? You can go to the DOI website, and there are a lot of resources there. They also have jobs there for people who want to get into the insurance industry, but maybe they feel more comfortable with a government job, or they currently have a government job. We work in Sacramento. We know how this works. They can transfer over to DOI from whatever department that they're in now and start a career in insurance. I would highly encourage people to check it out. If the things that I'm talking about are things that someone would find intriguing, someone thinks that, yeah, this sounds like really good stuff, go and apply. Go and search out those resources and get yourself well equipped to transfer into the industry. It's a great industry. It's got great people. It's very stable. And yeah, I highly recommend it.
What do you think would be that quality that someone would need to really be successful in underwriting?
Critical thinking.
Critical thinking.
Absolutely. Yeah, you have to be able to look at a risk and not just be, the book tells me to do this. You have to look at every risk as an independent risk. Everybody's story is different. That's how we treat it as underwriters. We treat each story as a different story. You have to be able to act impartially. So if I'm writing my buddy's policy, it's just another policy. I don't do anybody any favors. I don't do anything unfairly to make sure that people get an advantage. That's what underwriting is all about, treating everybody fairly.
Yeah. So if someone's a critical thinker, this might be right up their alley.
Absolutely.
I have a segment where the last guest leaves a question for the next guest. And our last guest was a social worker.
Uh-huh.
And the question they have for you is, do you ever catch yourself projecting your issues or even your goals or things that you do well onto the things that you, in this case, would be underwriting, or the people that you work with?
How could you not? as a human, I have inherent bias, and I recognize that. I know that I can't look at everything impartially because I have my experience, and I have the things that I've been through, and I have the way that I was raised, and I have my unique political and philosophical views. So for me to act like that never factors into my decisions as an underwriter would be a lie. The thing that a professional does is to do their best to clear out all of those, to recognize and to be aware of those, and to make the most impartial decision that one can make, the fairest decision that we can make. Because again, we can't avoid that stuff. We can only kind of manage it and mitigate the effects of those experiences.
Not just the issues or the bias, but what about the good stuff? Does that also get projected onto those around you?
It does, absolutely. I consider the people that I work with are all my friends. Like, I love these people. They are phenomenal people. When I took my last promotion into management, I was kind of hesitant. I'm going from an hourly to a salaried position. I don't know what this is going to look like. I've never really been in a serious management position before. What happens if I don't take this job? Who is going to be responsible for my friends? Who is going to be more invested than I am in making sure that they achieve what they're capable of? And I couldn't come up with someone who would care more. I'm sure that there are people out there who would be better at the job than me, but nobody, I think, would care more than I would about the results that I'm trying to help our underwriters produce. That's the way in which my positive experience kind of shines through. I'm very much a people person, and I want to make sure that everybody on my team is happy. And I ask them a lot of personal questions to make sure that, first of all, that I'm rewarding them in the way that they want. If I'm screaming from the top of my lungs, "Happy birthday, Susan," and Susan is really shy and doesn't like that, then I'm going to end up alienating her, despite what I think is a great way to recognize her. I constantly hear, the golden rule is to treat others how you want to be treated. To me, the golden rule is to treat others the way that they want to be treated, because at the end of the day, not everybody wants to get treated like I do. Everybody has the thing that they like, and the more that you treat the people the way that they're comfortable with and the way that they feel they deserve to be treated, the better results you're going to get from them, the more that they're going to listen to you, the more that they're going to trust you, because you clearly care about them as people and they're not just employee 246.
Yeah, they're not just a number. Yeah, 100%. Josh, thank you so much for taking us behind the scenes, giving us the story of underwriting, the thing that most people don't know exists, that happens behind the scenes, and how much work and analytics actually goes into it, and how to right size those jobs, the benefits, the discounts, and basically how the whole industry works. So thank you so much for your time. It was super interesting, and I'm looking forward to reviewing my insurance policy.
Absolutely. I appreciate you having me on.
Thank you guys for joining this episode of the Key Casas podcast. We'll catch you on the next one. Take care.